That's a I'm here for Clear Maths. Today we're going to look at pensions and other deductions when you're calculating your wages and salaries. This is for higher applications of maths, of course. So a pension is taken off before tax, but not before national insurance. That's the key point. So your employer also contributes to your pension pot, which we'll look at too. Your gross pay, remember, is the amount you get before any deductions is taken off, and your net pay is after you take off everything: pension, tax, national insurance, any loans like student loans, childcare, repayments that you're getting a benefit for, any other things that you possibly get as a benefit. So we're just going to look at pensions today to see how that works. So let's have a look quickly. So let's do a simple pension example, just calculating someone's pension, make sure we're comfortable with that. Jackie earns an annual salary of £28,500 and contributes 4.8% of his salary into his pension. Calculate Jackie's annual pension contribution. Okay, Jackie, so 28,500, 4.8%. So I'll change that to the decimal if I want, or times by 4.8 and divide by 100. 4.8 divided by 100 is 0.048 times 28,500. So 0.048 times 28,500, the pension contribution is 1368. And that's it.
Clever Maths is sponsored by Lecky, the educational publisher for Scotland. They offer viewers of this channel a massive 30% discount. Just use the discount code CleverMaths at leckyscotland.co.uk. The practice question books go all the way from level 3 to advanced higher and include national free 4 and 5 apps as well, so you can get any book you need for your studies. These are an excellent resource with questions on every topic and contain work solutions so you can see how the marks are awarded. As you go through the book, the questions get increasingly difficult, so by the time you finish your book, you'll be ready for your exams. Usually £9.99, just use the discount code CleverMaths to get 30% off that. Link down below.
So another example, Caleb earns $55,600 per year plus 10% monthly bonus. Each month he contributes 6.8% of his monthly gross pay to his pension. His employer also contributes 4.6% of his gross pay into his pension. Find the amount of money added to Caleb's pension pot after 9 months. So a little bit more complicated. Caleb's putting money in, but his employer is also putting money in. So together, we need to do it all together how much he's getting, but we also need to take into account his monthly bonus and his wage is quoted yearly, so I need to work out his monthly wage. So I'll just take his yearly wage to start with and divide by 12. So that's 4633. And we'll just, for the sake of ease, we'll just call that 0.33 and ignore the extra bits. So 4633.33 per month. But he also gets a 10% bonus. So with his gross is going to be 4633.33. And we're adding 10%. So you can do 10% of it and add it on, or times by 1.1. Because you do 100 plus 10% is 110%, so 110% is 1.1 when you divide by 100. And that is 5096.66. So that's our key number. Just a note, if you'd actually started off with his yearly wage and added 10% and then divided by 12, you'd be a difference by 1 pence. Basically, I'm not too bored about rounding here, so just don't worry too much about it. I'm just going to use 5096.66. We've got two percentages for his pension, 6.8 and 4.6. So he pays 6.8. So if I was working at his salary, I'd be using the 6.8 and taking that away. But I'm just working out the pension in the pot, so I'm using both of them. So total pension, well, I've got 4.6% and 6.8%. So together, I can just do that as one sum. Is 11.4%. So per month, it is 5096.66 times now 11.4%. If I just divide that by 100, I can times by 0.114. Which is 581.02. So that's per month, that's pension for a month. But we want 9 months, so for 9 months, we'll just times them by 9. 581.02, again, don't worry about rounding too much, times 9 is 522,918. And that's how much is in the pension pot after 9 months. And we're done there. Of course, if you rounded slightly differently at different points, you might be different by a penny or so, but again, just don't worry about it. It's more about the working in the example than the little things like pennies. Examples where we've got pension and we've got tax and national insurance to take into account to work out someone's net salary. So John earns a gross annual salary of £42,000. He pays 7% of his salary into his pension. Calculate his net annual salary. And we've got lots of things to work out here. Tax, national insurance, take the pension into account. And key thing to remember is tax comes off after pension, but national insurance does not. So let's deal with national insurance first. Looking at our national insurance, we don't need to worry about the pension. We just need to go to month or week. So I'll go to month. So month, wage for a month. It's 42,000 divided by 12, which is 3,500. So for the national insurance per month, it's between 797 and 4189, so that's fine. So I can do 3,500, which is my wage in between there, minus 797 times 0.12, because it's 12%. That is 32436. So the NI for the year is equal to, we'll just times that by 12 and get 3892.32. So I've done my national insurance. That's an easy calculation, so I'd probably do that first. Now I'll take into account the tax. So the first thing we need to work out is what we call the taxable pay. He pays 7% of his salary into his pension. So I need to take that 7% off. Now, how do you take 7% off? Well, I've got 100% minus 7%, which is 93%. So he's got 93% left, which is 0.93. So his taxable pay is equal to 42,000 times 0.93. Now, you could have just done 7% and then took it off if you want, if you prefer that sum. That gives me 39,060. And that's what we're going to use to calculate the tax. So for tax, we're going to go up to the table and we've got starter rate is between 12,570 and 14,667 at 19%. So starter 14,667 minus 12,570 times 0.19. If you need help on that, look at our previous video on tax. That is 398.43. And now we need to go to our next band because we've got quite a bit to go. Starter, Scottish basic rate, 25,296. So basic, we'll call that. It goes 25,296 minus 14,667 times 0.20 or 0.2. 212,580. And then we go to our next bit, which is the intermediate rate. That's between 25,296 and 43,662. So my wage is in between there. So for my intermediate rate, I'm going 39,060 minus the lower bit of that, which was 25,296. And we're timesing that by 21%, 0.21. 39,060 minus 25,296 times 0.21. That gives us 2890.44. So total tax, we're just adding up, remember. 398.43, 2125.80, and 2890.44 is 5414.67. So net pay we want to do. So we've already took off, once we got the taxable amount of 39,060, we've already took off the pension. So we just start with 39,060 instead of taking the pension off again, and then just take off the national insurance of 3892.32, and then take off our tax of 5414.67. If you don't like that, what you can do is start with your full wage of 42,000, but you'd have to work out the actual pension, which I didn't need to do for this. Work out 7% and take it away, and you will get back to 39,060, and then take away the tax and national insurance. But in any case, we get 39,060 minus 3892.32 minus 5414.67. A final salary of £29,753 and a penny. 29,753.01, and we're done there. Okay, another example with pension, tax and national insurance. James earns a gross annual salary of £26,000. He pays 8% of his salary into his pension, and his work contributes 5%. Calculate his net annual salary. Well, it looks like they're trying to trick us here by giving us two pension percentages, but just remember, the bit that his work contributes does not come into his wage at all. So we can just ignore that 5% and just think about the 8%. So like I did last example, I will start with national insurance and get that out of the way first, because with the pension and tax, I need to take the pension off first to get the tax. So let's look at the national insurance. We need to work out his weekly or monthly wage. So I'll think monthly wage. Month wage is 26,000 divided by 12. £2166.67. Again, don't worry too much about the fact that you need to round here, just round 2166.67. Okay, so the national insurance is between these two numbers, but I'm in between there, so I'll do 2166.67 minus 797. So the national insurance, 2166.67 minus 797, and that's times 12%, 0.12, but that's for a month, and I want to know the year, so once I've finished that, I will times by 12. 2166.67 minus 797 times 0.12 is 164.36. So the national insurance for the year is equal to 164.36 times 12, 1972.32. 1972.32. So we'll keep that number to later, and now do the tax. So we need to know his taxable pay, remember? And that is found by taking off his pension contribution, not his employer, just his. So we've got 26,000 times. To take away 8%, I can do 100 minus 8, which is 92. So he's got 92% of his salary left after I take off the pension, or 0.92. 26,000 times 0.92 is 23,920. So now we can work out the tax. So let's look at the bands. We've got the starter rate to go with. So starter 14,667 minus 12,570 times 19%. 14,667 minus 12,570 times 0.19. That gives me 398.43. Put my point in. And then we go to the next band, which is the basic. Now, I think we are in the basic. Let's just double check. It goes up to 25,296, but I've got 23,920. So I'm in between. So yep, 23,920 then is where I go to, minus the lower bit of 14,667, and it's times 20%, I believe. Yep, 0.2. $23,920 minus 14,667 times 0.2, which is 1850.60. So total tax, 398.43 plus 1850.60 is 2249.03. 2249.03. So now we need the net wage. So the net wage for the year is taking the taxable 23,920, because I've already took off the pension, remember, minus the tax 2249.03, and minus the national insurance 1972.32. $23,920 minus 2249.03 minus 1972.32. 19698.65. 19698.65 pence. And we're done there.
SQA Higher Applications of Maths 2023 question 4. It says you must refer to the information on tax bands 2022-23 given in the pre-release material when answering this question. Key points, so you need to go and check that booklet, so let's do it right now. So there's the tax bands there, copied in from the data booklet. Now it says James works in a large building company, is a permanent employee and he has a gross annual salary of £36,700. James pays 4.7% of his salary into his pension, and then he pays 307,145 national insurance. So we don't need to work out his national insurance, which is given to us. Calculate his net annual salary. Net is after you take everything off. Now, we have to work out his tax. Remember, this is a one key thing. If you're working out someone's tax, you take the pension off first. If you don't do that, you're going to lose a mark. So taking off his pension, I need to take away 4.7%. Two ways to do that. Just work out 4.7% and then take it away. Or I'll always use multipliers when I get to higher. So I'm going to do, in my calculator, 100 minus 4.7, because I'm taking away 4.7. That's 95.3. So I'm going to times his salary by 0.953, and that will give me what his salary is after the pension's taken off. So I'm going to do 36,700 times 0.953. 0.953 times 36,700 is £34,975.10. 34,975.10 is his taxable. Right, now we need to use our table to work out the tax in each band. So we'll just do it line by line by line. So first line, we pay £0. Second line, well, his wages way above that. So I need to do for the second line, I'll just put a little dot, 14,732 minus 12,570, because that's the two bands, times the percent as a decimal, 19%, 19 divided by 100, 0.919. Now usually we just work these out separately instead of one big sum, so I'm going to do that one there. 14,732 minus 12,570, you can put brackets around that or just press equals, times 0.19, and you get 41078. So I'll just take a note of that, 41078, and then we'll do our next one. So our next one is this one. Let's call that I. For II, again, the highest there is 25,688, which is still below his salary. So I'll just do 25,688 minus 14,732 times 20% this time, so 0.2. So calculate again. Taking my time, 25,688 minus 14,732
times 0.2 is 2191.2. So 2191.20. Okay, that's I done, I. That'll be this one. So in this case, I'm in the intermediate now. 43,662 is above his salary. So I'll do his salary minus the lower. So his salary is 34,975.10 minus 25,688 times the percent, which is 0.21 this time. So again, calculator, 34,975.10 minus 25,688 times 0.21 is equal to 1950.29. So his total tax, I just add up all the tax that I just worked out. $410.78 plus 2191.20 plus 1950.29 is 4552.27. So now his net pay, I just take his total pay and take away everything. Well, I don't need to start with his total pay actually, because I've already taken away the pension, which is down here. So we can start off with the taxable bit and just take away the national insurance and the tax. So his net pay is 34975.10 minus his tax, which is 4552.27, minus his pension, which is 307,145. So getting the calculator and being careful to put everything in right. 34975.10 minus 4552.27 minus 3071.45 equals 27351.38. So pound sign 27351.38. Okay, let's briefly go over where you're getting the marks for this. Let me just check this. So you're getting a mark for obviously your final answer. That is clear, but taxable income, if you get 34,975.10, if you take away a pension, you get a mark there. So let's just take a note of that here. There's a mark there. And then you get calculate the tax for starter, basic and intermediate band. So basically calculating all these taxes, you get a mark. You get a mark for calculate tax for the remaining bands and total tax to pay. So, starter, you actually get a mark for doing 0, then these two, and then a mark for the final band and the total. So you get a mark there, and then a mark obviously for your final answer, add them all up.
This has been Mr. Clem from Clem Maths. Today we've looked at pensions and how to work out your tax and national insurance and your wages, taking into account your pension contributions. Take care, stay safe, and goodbye.